Welcome to 5 and 5 with Miller and Mango, your go-to source for all things finance with a twist of culture infused into every episode. Join your hosts, seasoned financial professional Miller and marketing maverick Mango, as they discuss 5 of the latest market and cultural trends and help you instill common sense into the ever-changing landscape of finance, all within 5 minutes. It's time to dive into the numbers, unravel market mysteries, and discover the strategies that matter. Welcome to 5 and 5 with Miller and Mango.
Hello and welcome back to 5 and 5 with Miller and Mango. I'm your host, Mike Manganello, with my co-host, Miller Hoffman.
How we doing, everyone? We are trying to survive a rainy day here in the Carolinas. I hope everyone's being safe and avoiding some of the thunder and lightning that we got this morning and last night.
It is also spring break. And for some reason, spring is sprung, but it's still cold and rainy.
We haven't quite gotten the message yet here in the Carolinas to get a little bit warm, and the humidity is upon us, though.
Yes.
Don't worry.
What also is humid is topic number 1. McDonald's has partnered with Krispy Kreme to sell their donuts in 2026. Huge news.
Huge.
For everybody.
Showstopper.
Yes. Thoughts?
Just when you thought McDonald's couldn't get more unhealthy, they release a partnership with Krispy Kreme, which may be the only other restaurant out there, let's say, that's more unhealthy than McDonald's. Mango, I saw a really neat post online the other day. It was from a Swiss museum, and the Swiss infamously hate fast food.
Yep.
And the last McDonald's burger and fries that they served was in 2009. They keep it in a case, not something that's a vacuum seal or anything. There's no mold. The burger still exists. It still somewhat resembles a burger and fries, and it's over now, 10, 15 years old. So whatever they're putting in the food here, and I'm a McDonald's fan. I'll go eat it every once in a while, but it's wild. But hey, here's to a partnership.
Yeah, I was kind of caught off little guard there, and my son Dylan, who's the 4th grader, said, "Is that copyright?" And he says he uses it the wrong way. But why would McDonald's need to do this, right? They already tout a great breakfast. I'll say one of the few things I do like from fast food is McDonald's is breakfast. Mm-hmm. But why? I understand from the TradeWinds side. I understand from the Krispy Kreme side to expand their reach and scale to get into thousands and hundreds of thousands of McDonald's. But why would McDonald's feel the need to add a donut option to their services?
Yeah, we've seen some businesses have these strategic partnerships with other providers, even in some cases where there's a competition amongst the two. You think about how Amazon has had to utilize other different shipping companies, and they have their own fleets themselves, but they still utilize often other types of companies to partner with. So FedEx, I know, just went through some pretty serious talks with Amazon to try to figure out the logistics. Both companies want to speed up how quickly they're getting packages and letters, that kind of thing, to people. Yeah. So it's funny to watch such a competitive market that we have here in the United States, but companies actually working together and for ultimate benefit of the consumer is what I would argue.
Now, would you go to? You said you go to McDonald's sometimes for breakfast. Would you go there just for a Krispy Kreme donut, or do you think you would actually order a donut when you go there?
I don't think I would order that. I don't eat much at McDonald's. I'll go and get some of their coffee every once in a while, which isn't great coffee, but it counts. It does the trick. But what about you? What does the hot and ready sign change you?
I'm not a big donut person. My family is. I don't think when we do go to McDonald's, we would get a donut. I'd rather just go to Dunkin' Donuts or go to Krispy Kreme.
There you go.
Because I just would think that it's not as fresh. That's just the thought. So it seemed interesting to see what happens.
Replacing that hot and ready or hot and now sign. Yeah. Man, that's tough to try to do.
Let's talk some finance. Recently, I just read that Mr. Warren Buffett was in a news. His favorite market indicator is red. It's selfly called the Buffett indicator. I'm going to read you what it actually is. Widely known as the Buffett indicator, it measures the size of the U.S. stock market against the size of the economy by taking the total value of all publicly traded companies, measured using the Wilshire 5000 index, and dividing that by the last quarterly estimate for gross domestic product. Too much from the simple mind in my mind.
Sure.
Give me your thoughts.
Yeah, in layman's terms here, he's measuring the size of the publicly traded markets, or what we call a capital market, stocks and bonds and such, mainly in this case stocks, versus the total size of just the U.S. economy, or what is our total output as Americans, as a country. Buffett normally is pretty good about avoiding some of these indicators or, things that light up and, signal certain things. So I'm surprised to hear that he's quoted in this kind of way. And all of his shareholder letters that he does and are very famous, and shareholder meetings that he has, he's consistently said, look, it is so hard to know, if not impossible, to know where the market is going to go and how to prepare in a very short-term basis. I mean, day to day, it is a coin flip of what's going to happen. So I think that's the problem. Buffett's not really a offender here in this case, but a lot of talking heads are, whether they be on TV or writing articles. I think the problem is they're incentivized to make these big, bold claims, right? The recession's coming soon, or the market's going to double, or something in between. They are revered for when they get things right occasionally. But they go unpunished when they are wrong, which is a vast majority of the time. So you turn markets into a circus, expect to see a couple clowns along the way.
Yeah. That's helpful. Recently, Miller and I were actually at industry conferences, so we'll have to kind of quick recap the listeners and what are the key takeaways that we got from it. Why don't you talk about the Orion conference that you were at?
Yeah, I want to keep mine short and sweet to give you time to dive into yours. There was a presentation on technology, specifically in the financial space, and one of the panelists said, just because you can doesn't mean you should. So we have more decisions now than we've ever had, not just as representatives here in the financial space, but just as a human, right? You're driving down the road, you're making hundreds of decisions a minute. So just because you can doesn't mean you should, which puts the onus back on us. How do we direct around what we should do, not just what we can do? But curious to know what you've learned.
Yeah, I was down at the Wealth Management Convergence Conference in West Palm with our CEO, Tim. And, I look at conferences as, networking opportunities, validating what we're doing, and then learning some new things. My 3 key takeaways were, the hot topic of AI and how people are using it for good, not good or bad, but how they're using it within their practice. The emphasis on client experience, which I thought was, again, funny or ironic from a marketing standpoint. Everything that we do at TradeWinds should be for our clients and upping that experience or enhancing that experience. And it seems like a lot of the people that were talking were just getting to that point in their practice or their business, right?
Sure.
And marketing being one of those things, and digital marketing being one of those things. But how we do better for our clients and being proactive and stuff like that. And the last one is a continuance of digital assets and Bitcoin and how that fits into the practice. So I think where we are positioned at TradeWinds and what we do here is on par or better than what other people are looking at. And actually another thing was owning your client's data or your client's information, which you should own at the end of the day. So I think technology, client experience, and what they could be doing to grow their practices were the 3 key themes that we looked at as well.
Interesting.
Yeah.
Key themes for you guys, but it seems like key themes for a lot of people in the business world right now.
The key themes around the triangle right now is March Madness. So one of the things that happened over the past 2 weeks, the last time we discussed, was the tournament has started. We got 3 local teams in the Sweet 16, which is absolutely amazing. Right. And then we got Miller's team, Clemson, as well.
That's
what a ride.
The Tigers are still dancing. So we took a break on the football field this year. We were good, but not as good as we like to be. So hopefully we'll continue to make some waves here in the tournament.
Yeah, I think it's been record-breaking numbers for viewership, especially locally. Exciting tournament so far. Excited for the Sweet 16 coming up. Yeah. It'd be unprecedented if I don't think all 3 teams could make it to the Final Four, but it would be absolutely amazing.
Yeah, that would be really, really cool. Yeah. What are we finishing up with, Mango?
Let's finish with, explain it to me like a 4th grader. What is an IPO?
Yeah, and you've probably seen this in the news as the IPO just market is starting to heat back up. After
it's been a little lull for a while, right?
Yeah, 2022 was a tough year when things were down. We tend to see IPOs, which I'll explain in a bit, really start to pop up more when markets are pretty frothy or things are, indicators look pretty good. The sentiment is solid, but IPOs stand for initial public offering. So, Mango, there's two main ways that businesses raise money to finance their operation. So let's say we own a lemonade stand.
Okay.
We can either sell equity or ownership that we own in the business, and people pay into that, and therefore we have money to do something with, buy lemonade or cups in this circumstance. Or we can borrow money. So, Mr. Bank of America, please give us a business loan for X amount of money so that we can continue operations. IPO is mainly related to the former, selling equity. So a business will go and IPO or list their shares of equity on, in this case, a public market, which we call the primary market. So let's use Walmart as an example. Walmart in the past has gone and IPO'd, and which allows you and I to buy ownership, let's say, right into Walmart. That's the primary market, which doesn't happen a whole lot, let's say. What happens on the secondary market, and this is a popular misconception, when Walmart stock is traded right now, Walmart doesn't get a cent of that money. The only time Walmart's gotten money from selling stock is their initial public offering, or whenever they want to offer additional shares to the public. So Walmart really doesn't care from strictly a business perspective or getting money from the transaction of what their share price is. They certainly care in the long run. They want to see their company be profitable, and they benefit from that too. Yeah. But just because you buy and sell a share of Walmart, they could care less. They're not getting any money from that. So interesting way to fund, your business. We're talking about businesses that are worth now trillions of dollars. Yeah. You're not going to be able to borrow trillions of dollars to finance your operations. I have a couple of
follow-up questions on that.
Sure.
Can the regular investor buy into an IPO? Or is there another market or way that you need to be able to? Because I'm assuming, again, the assumption is you want to buy in when it's low, right, in hopes that it goes higher when it just gets launched. Like I said, it's like a baseball card, right? You want to buy a baseball card rookie year at its very low point and hoping it goes up.
Sure. Yeah, IPOs are infamously pretty risky, right? Yeah. It's the first time that it's testing the market waters. Does the market think it's undervalued for what the company is asking for, or is it a great deal, to your point? So not all IPOs are great deals, right, or bargains, especially during, tough market times, or if, the market thinks that the company's really overvalued itself. We can see a pretty sharp valley in the price too. There's just not a lot of historical data to support price changes.
Yeah.
So regular investors can get access to it. The folks who get first in line a lot of times are market makers or large groups looking to buy,
big chunks.
big chunks of stock, but you certainly can. And you have access to it.
I remember the biggest IPO somewhat recently, probably 10 years ago now, was Alibaba. That was a hot one years ago. But I guess the IPO, that was like the tech boom as well and stuff like that.
Yeah, there's on the political side of things, Donald Trump's recently launched a company, DJT, I think is the ticker symbol. So it's in the news pretty often right now. And people, similar to other IPOs, are challenging, hey, is it actually worth it?
Yeah.
Is the valuation of this social media company that Trump's promoting, is it actually worth it? And where are they getting their valuation from? So take that wisdom and apply it to really any other company.
Advice would be do your research and speak to your financial advisor.
Absolutely. And I'd be surprised if he or she comes back and says let's get all over it. It can just tend to be very uncertain, right? There's not a big, by definition, there is no track record to what the previous periods have looked like.
I'm excited for the TradeWinds IPO in 2034. 10 years?
Hey, we're waiting. We're waiting. Let's see who wants to buy large chunks of stock.
Awesome.
At that point.
Well, thanks everybody for listening. We had a great time doing this. We refreshed from the conference, a lot of new ideas. Look for some exciting things from TradeWinds side, upcoming webinar, which we'll promote on our next podcast. And have a great day and happy spring.
Happy spring.
Take care.
TradeWinds LLC is an investment advisory firm that is registered with the Securities Exchange Commission. Registration does not imply a certain level of skill or training. TradeWinds will not accept trade offers online, and any such request, orders, or instructions that you send will not be accepted and will not be processed. This presentation has been provided for informational purposes only and is not intended as legal, tax, or investment advice or a recommendation of any particular security or strategy. The investment strategy and themes discussed herein may be unsuitable for investors depending on their specific investment objectives and financial situation. Information obtained from third-party sources is believed to be reliable, though its accuracy is not guaranteed. Opinions expressed in this commentary reflect subjective judgments of the author based on conditions at the time of the publication and are subject to change without notice. Past performance is not indicative of future results.